The goal of this presentation is to provide clarity on recent updates to Section 274 of the Internal Revenue Code. After reviewing this short presentation, you should be able to summarize the changes to rules around business entertainment expenses and meal deductions. Distinguish between deductible and non-deductible expenses under the new rules. Locate and apply information from the public IRS document to example scenarios. The final regulations address the elimination of the deduction under Section 274 for expenditures related to entertainment, amusement, recreation activities, and provide guidance to determine whether an activity is of a type generally considered to be entertainment. Who is affected? The final regulations affect taxpayers who pay or incur expenses for meals or entertainment. These regulations are effective on October 9, 2020 and will apply for taxable years that begin on or after October 9, 2020. The 2017 TCJA eliminated the deduction for any expenses related to activities generally considered entertainment, amusement, or recreation. It also limited the deduction for expenses related to food and beverages provided by employers to their employees. Under prior law, taxpayers could deduct 50% of meal expenses and could deduct 50% of entertainment expenses that met the directly related or business discussion exceptions. The Act repealed the directly related and business discussion exceptions to the general prohibition on deducting entertainment expenses. Thus, entertainment expenses are no longer deductible. Taxpayers may still deduct 50% of an otherwise allowable business meal expenses if the following conditions are met. The expense is an ordinary and necessary expense under Section 162A paid or incurred during the taxable year in carrying on any trade or business. The expense is not lavish or extravagant under the circumstances. The taxpayer, or an employee of the taxpayer, is present at the furnishing of the food or beverages. The food and beverages are provided to a current or potential business customer, client, consultant, or a similar business contact, and in the case of food and beverages provided during or at an entertainment activity, the food and beverages are purchased separately from the entertainment, or the cost of the food and beverages is stated separately from the cost of the entertainment on one or more bills, invoices, or receipts. The entertainment disallowance rule may not be circumvented by inflating the amount charged for food and beverages. What is entertainment? Entertainment means any activity which is of a type generally considered to constitute amusement or recreation, such as entertaining at nightclubs, cocktail lounges, theaters, country clubs, golf, and athletic clubs, sporting events, hunting, fishing, vacation, and similar trips including such activities relating solely to the taxpayer or the taxpayer's family. Entertainment may include an activity, the cost of which is claimed as a business expense by the taxpayer, which satisfies the personal, living, or family needs of any individual, such as providing food and beverages, a hotel suite, or an automobile to a business customer or the customer's family. What is not entertainment? Entertainment does not include activities which, although satisfying personal, living, or family needs of an individual, are clearly not regarded as constituting entertainment, such as supper money provided by an employer to an employee working overtime, a hotel room maintained by an employer for lodging of employees while on business travel status, or an automobile is used in the active conduct of trade or business even though also used for routine personal purposes such as commuting to and from work. On the other hand, the providing of a hotel room or an automobile by an employer to an employee who is on vacation would constitute entertainment of the employee. An objective test shall be used to determine whether an activity is of a type generally considered to constitute entertainment. If an activity is generally considered to be entertainment, it will constitute entertainment for purposes of Section 274 regardless of whether the expenditure for the activity can also be described otherwise, and even though the expenditure relates to the taxpayer alone. However, in applying this test the taxpayer's trade or business shall be considered. Thus, although attending a theatrical performance would generally be considered entertainment, it would not be considered entertainment for a professional theater critic attending in a professional capacity. What forms of entertainment are no longer deductible? Business entertainment expenditures at a social club, golf club, or similar venues, including dues and fees. Tickets to the theater, concerts, and other similar activities. Fees for outdoor activities, including fishing, hunting, and sailing outings. Sporting events tickets, including skybox expenses and transportation to the event. Contributions to educational organizations for the right to purchase tickets to athletic events, which are no longer considered charitable contributions and so are not deductible. What are the exceptions to the basic rules? The limitations on deductions do not apply to expenses for food or beverages provided to an employee of the taxpayer are not subject to the 50% deduction limitation to the extent the taxpayer treats the expenses as compensation to an employee. Expenses for food or beverages paid or incurred by one person in connection with the performance of services for another person, whether or not the other person is an employer, under a reimbursement or other expense allowance arrangement. Expenses for food or beverages paid or incurred by a taxpayer for a recreational, social, or similar activity, primarily for the benefit of the taxpayer's employees. Food or beverage expenses of a taxpayer to the extent the food or beverages are made available to the general public. Expenses for food or beverages that are sold to customers in a bona fide transaction for an adequate and full consideration in money or money's worth. Expenses for food or beverages provided to a person who is not an employee of the taxpayer to the extent the expenses are includable in the gross income of the recipient of the food or beverages as compensation for services rendered or as a prize or award under IRC 174. How do we determine whether an expense is ordinary and necessary? An expense is ordinary if it is normal or common within the taxpayer's business community, even if it is an unusual expense for the taxpayer. An expense is necessary if it is appropriate and helpful to the trade or business. The courts tend to accept the taxpayer's own judgment of the business necessity of an expense, so long as the item is neither personal nor a capital cost. The ordinary and necessary requirement for business expenses has been interpreted to also include a general rule that an expense is deductible only to the extent that it is reasonable. For amounts paid or incurred before January 1, 2018, deductions for entertainment costs may be disallowed to the extent that they are lavish or extravagant. In the case of business meals, the Code expressly disallows the deduction of meal costs that are lavish or extravagant under the circumstances.